When I was losing money in the markets, I always used to wonder, what do others do differently from me to make money in the markets? And what I realized is that they wait for the perfect market conditions to execute their rule-based strategy. And when I realized that, when I started implementing that, is when I finally got profitable. So let me show you how to do it. Before I actually show you how to do it, here are just some of my profits that I used to make with this strategy. So this is just a month of trading, and you can see all the profits and all of the losses. So the first question that we are gonna answer is why this strategy works every single day. So it's only 3 simple steps, and the point is that it's rule based. So it removes all the guesswork, and it literally makes you know what to do every single day, and that means that you can do it consistently, because if it's only 3 simple steps and it's only rule based, that means that you're just going to come to the markets, see those 3 steps and just execute it as you should. So that is exactly why it's so repeatable. So the second thing is conditions. The best time to trade is from 9:30 to 11 a.m. Eastern time, which is New York open, and then hour and a half into New York session. But you can also go into the London and Asia session. So New York is the best, London is after that, and then the Asia is worst, but you can also trade them and it's going to be the same thing, hour and a half after the market open of those sessions, but the best one is going to be New York market open. And the second thing is that we do not want to think too much in the markets. I'm going to show you exactly how we can see and how we can spot the manipulations, that we are just going to see how they play out in the market, and we are just going to execute based on our conditions and rules, and that's literally it. So let's actually go to the step number 1. So the step number 1 is going to be to mark out key levels in the market. So we are going to do this on the 5-minute time frame. So you open the 5-minute time frame on your trading view, you go when the market open actually happens. So from 9:30, first 5 minutes is the first 5-minute candle. What you do is you mark out the wicks high and the wicks low. So it's pretty simple. After that, what you do is you go to the 1-minute time frame, as you can see right here, and the next step is going to be direction. So basically we have 2 potential outcomes. One is going to be we go to the upside, sweep the high first, and then we are going to target the downside, the 5-minute low. The second scenario and the outcome is we first go to the downside, sweep the 5-minute low, and then we target the 5-minute high. So it's either we sweep to the upside targeting the outside, or we sweep the downside targeting upside. So very simple, but we do this on the 1-minute time frame. But we also have some stuff that is actually going to make us be able to trade on the days where we just don't get the setup, and that is, first scenario is going to be this is the 5-minute high, 5-minute low down here. If we go to the downside, sweep the downside, we just target the upside. But what if we do not get the entry I'm going to show you later, by the way. What if we do not get it? We just expand the range. So we just mark out the new high and the new low that just swept the 5-minute high and low. So now what do we have? We just have the bigger range, and we just go by the same rules. We wait for the sweep of the upside to target the downside, or the other way around, we just wait for the sweep of downside to target the upside. I'm also going to show all of this to you later on the chart. And now really important thing is the entry model, which I'm also going to show you on the chart, but it's pretty simple. So after we get the sweep, let's say of the downside, we want to see the fair value gap in the market that was last created, so as close to the sweep as possible. And then after we actually close, so we swept the downside right here, and then we closed above this fair value gap, and that's where we enter. So on this closure right here is when we enter into the market, targeting the other side of the range. So if we do not get the body closure above this fair value gap, we are not going to enter the market. It's pretty simple. Also, you are just gonna see it on the chart later. And this is the example how it may look and should look on the chart. So first thing is this is the 5-minute range. So we are just gonna simplify. This is the 5-minute range right here, and then we got the sweep of the downside. We can also see that while we swept the downside, we are inside of this fair value gap, which is just a added confluence. So you don't need to focus too much on those, but that will just be added confluence to our position. And then after that, we left a fair value gap right here. You can see that after that we closed above this fair value gap. There is our entry, and then we just target the upside. So I'm gonna show you right now how we do it on this chart. But before I do that, if you learned something new in this video and if you like it so far, just leave a like and also subscribe to the channel if you want. So let's get into it. Okay, so here we are at the chart. You can see we are at the 5-minute time frame, and if we look at this candle right here, you can see this is a 9:30 candle. So this means that this is the first 5 minutes of the market open. So 9:30 candle is going to last from 9:30 to 9:35. So if we mark out high and low of this candle as like this, so this is the step number 1 that we talked about. And now we go on to the 1-minute time frame. As you can see, this is our 5-minute range. So you can see this right here is the last candle and this right here is the first candle. So all we need to do right now is we need to wait for the step number 2, which is just a sweep of the one side. So let's see if we do get the sweep. So there it is, we got this sweep of the downside right here. And what do we do right now? We just look for the step number 3. So we want to target this high up here. How do we do that? By entering when we disrespect the fair value gap, and this right here is the last fair value gap in the market, because after that there is no fair value gap. So all we do is we wait for the disrespect of that fair value gap. So right now we tapped into it, there is nothing. So all we do is we just wait, and let's see. So we got a beautiful closure to the upside. Let's see if we will inverse it this time. So still not. So this is the market just wicking. We want to see a closure like this, and let's wait a little bit more. So sometimes it's going to take a while to get the entry, but when we get it, here it is, we just got it. And what we do is we enter the market right here. So we execute a position. We can put our stop loss either on the candle's wick or on the candle's body. It's totally up to you. It's just whether you like to target bigger risk rewards or smaller ones. And what do? We just target the high of the range, and let's see how will that play out for us. So looks like we just went straight to the TP, so just beautifully working in the market. It looks like we just shot straight for the TP. So you can see 3.14 risk to reward. So risk to reward is pretty good, because when you pair this risk to reward with the win rate this strategy gets, which is about 80 to 85% win rate, it's just absolutely beautiful. So let's go to the second example right now. Okay, so here's the second example. So you can see by the timestamp down here, we are at the 9:30 candle. So this is going to be our range that we mark out, of course, on the 5-minute time frame. So we mark out high and the low. So it's pretty simple. And after that, step 1 is done. Now we go to step number 2, and that is just waiting for the sweep of the one side on the lower time frame. So on the 1-minute time frame, we just wait for the sweep of the one side. Let's see what happens. So we got the sweep of the downside, but right now if you look right here, there is no fair value gap, so there is no entry right now in the market. So what do? We just wait. So let's see what happens next. And we just swept the upside right now. So when this happened, as I told you, it's scenario number 2. So we just mark out the new range that we made in the market. So we are expanding it a little, and the same rules. We are just waiting for the sweep of the downside and then the upside, or the other way around. We just wait for the sweep of the upside to target the downside. So pretty simple. So let's fast forward the market and let's see what do we actually get. So looks like we are going towards the downside. So yep, we actually got the sweep of the downside right here. So what are we gonna do? We are going to mark out the fair value gap that we left right here. Also, if you look to the left, we got the sweep. We also respected this fair value gap right here, which is the thing that I told you. We want to ideally see liquidity sweep and then the respect of a fair value gap to the left. So we also respected that fair value gap. And let's see if we do get the actual closure above it, and we do. So what we do is we enter the market, as I told you, stop loss either down here or on the body. And what do? We target the upside. So this one is going to be a really good risk to reward, almost 4. And let's just fast forward the market to see what actually happens. And we just ran straight to the TP, even a bit more up here. So you can just see how beautifully this strategy works, and make sure to understand how huge this can be in the actual real market, because when you make almost 4%, that is just abnormal profits with a larger capital. So no need to rush 10 risk to reward or 20 risk to reward, because this is absolutely enough. So before you actually leave the video, I want to just give you something for completely free, and also tell you that if you want, you can go down there into the description and check out my second YouTube channel, where I just document all of my trades, live recordings, everything, so you can watch me actually live trade. Also, if you want, you can claim my free playbook down there, which is a 10-page playbook that is just absolutely everything about this strategy that I just showed you. So if you want, you can claim that. You can check out my second channel. Also, if you like the video, make sure to leave a like. Also, subscribe to the channel so you don't miss anything new I upload on this channel. So with all of that being said, I'm just gonna see you in the next one. Peace.